Hi, I just want to walk you through two trades on crude from today. The first one is a sort of reversal trade. Now, I've been telling people a lot lately that I don't like reversal trading, and I really don't. And I much prefer to get in when the market has already shown its hand. I just think that's a better way to trade. I don't believe in buying a market that's moving down or selling a market that's moving up. The other trade we're going to look at is a breakout trade, a pre-breakout trade. But first, let's look at the reversal trade. What we can see is we've got these three circles here indicating that a lot of size is traded at those prices. We have a market that's moved down. We can see we've got an area of high liquidity here. Now what I want to see the market move up past these three circles. Now, one of the customers said to me the other day, if you trade after the reversal has occurred, isn't that chasing the market? And well, it seems like you've got a choice between chase the market or trade against the market. For sure, it's much more sensible to buy a market if it's moving up than to buy a market if it's moving down. So anyway, what I'm looking at, watching this area where these three circles are, and I want to see the market start to attack that area. Now what you can see, we've already got this 260 that hit here, and we've ticked up. So I want to see the market attack this area, see some aggression on the buy side, then I'll hit into it. Now, I'm actually annotating this, doing the screen recording, doing the voice recording after the event. And what you can see, you could see a lot more buying than selling coming into the market. And so I kind of hit into that. Now, I'm not married to this trade at this point. If the sellers come in and we see the sellers start hitting in here, that's the cue to get out. Now, what I can see, the sellers here is 127, 128 sellers hitting into this market, but the market's not moving down. So you're seeing some size hit into the market, but effectively market's not moving down. They're kind of getting stuck. So basically, I'm sitting here thinking, okay, there is some selling size. If that selling starts to tick the market down, I'm actually going to get out of the trade. Maybe even 3-4 tick loss. Now, you've just got to be prepared to scratch quite a few trades if you're going to trade like that. Not every trade is going to be a winner, but if you are looking at tight stops, then you have got to be ready to kind of be quite brutal on scratching trades. Now, as you can see, we still haven't ticked down through 52.70. So just waiting. What I'm expecting is basically, because we've got this volume here, I'm expecting a pop to the upside. I'm expecting a little nudge. So at the moment, I can see it's not moving against me, but I can also see I haven't really got the pop I want. So as soon as I get that pop, then I'm kind of a bit more relaxed about the trade. Been in this trade probably 10 minutes now. Market hasn't really gone anywhere yet. Hasn't really gone anywhere to the downside or the upside. So we're just starting to see now the first sign of some upside momentum. So the first sign of an imbalance where we've got a lot more buyers than sellers. We can see that on the current trades on the buy side. We can see that on the recon tape. And this is what we want to see. We want to see a pop in our direction. We want to get to our first target, and then we can kind of relax a little bit. If we look up, we can see, according to the volume profile, it tapers off around 52.31. So we can get through our first target. Not really that interested in the volume profile or the activity. We will get to 52.31. As we've traded a lot of size through these prices already, probably a bit slow going through them anyway. So what we'll do is we'll just fast forward and we'll look what happens when we get to the top of the volume profile here. Okay, so we moved on. We actually go up to 52.34, and you can see there's a lot of size hitting into the bids now. We've got a big block trade down here. So what I'm doing at this point, I'm thinking of getting out of the trade. You can see on the chart, we're starting to move sideways. So there's lack of interest. So what I do at this point, I'm going to clear the trades on the meter up here, just so I can get an idea of where we are and how imbalanced the market is. And then what I'll do is, once I've cleared the trades, I'm just going to keep an eye on it. I'm already ready to get out basically, but once I've cleared the trades, I want to just keep an eye on it. And if I just see any sign of aggressive selling, I'm just going to get out, because it's already come back 4 ticks. It's already come back from that area we're talking about, 52.31, and I'm just watching this now. So we see 91 buys. Just got my eye on there. Where the mouse is there, just got my eye on it. So this could just be a pullback, but there was some aggression on the way down. And like I say, look, it's a slow day. You can see it hasn't really moved much today. So we've already moved down from 52.34. It was just above that area we were looking at earlier on where the top of that bulge in the volume profile was. Don't really want to give this any more time. We can see we got some sellers coming in. So basically at this point, I'm not interested in staying in the trade anymore. I think it's done. No point in waiting for it to come all the way back to my entry. So now what we'll do, we'll have a look at the next trade, a bit more exciting, a breakout trade. So the market did move down from where we exited, so it was a good exit. Can feel happy about that. We've still got this bulge in the volume profile, so if it gets down to 52.17 around that area, we could see the market turn back up and just rotate 52.17, 52.31. Now what we're going to watch for as we go down, we've got this area down here where we hit before, we had some liquidity, bounced up, moved down again, there's some absorption, obviously an area of interest. So what we're going to look for as we move down to it, we're going to look to see if the market accelerates into that price. And if the market accelerates into that price, we're going to buy into it, we're going to sell into it, and we're going to try and take advantage of the market breaking down. Now with this kind of trade, if you sell into a level like that, if you sell into a breakdown, you're only going to sell into it if you see the seller's dominant. And once you've sold into it, the moment that looks like they've flipped, the moment it looks like the buyers are dominant, you're done, you're out. 2 ticks, 3 ticks, 4 ticks, doesn't matter what it is. The moment you see the buyers come in, you're out. It means your timing was off. But effectively what should happen is when it goes down there, if they're going to run the level, you'll see a lot of selling activity. Selling down there. And sellers really shouldn't step off the gas, and they should just punch through the level. And then when they punch through the level, the market should break down. Okay, so let's look at what actually happened. Okay, we can see the sellers are dominant here. We just need it to come down a little bit more. Just need it to come down. We want to make sure it's going to tickle the bottom so far, tickle the lows. We want to see that sell side momentum come up. We've got 230 sells. Need to see it tick down. Boom, it's tick down again. Need to see some sellers. Look, more sellers. Just look at that volume of sellers. Just look how they're hitting that. You know, and look at the buy side. There's really not much on the buy side. So that's kind of a sign that they're going to run the level, right? It's not a guarantee, but as long as they are hitting the sell side aggressively, it's not going to tick up a lot anyway. Now, I could have got in earlier than that. Really should have gotten earlier than that, but, you know, whatever. So now what we want to see, we don't want to see much of a backtick. We want to see the market start to break down. You can see it's kind of got a bit even. You've got a little bit more buying there, but not the kind of quantity you had before, and there's the break. Right, and that's a pretty big break. And what you're going to see me do now is actually get out of this trade really quickly. And the reason I get out of it really quickly is because it's such a violent move. I think it's not going to last. So if it was more of a churn down, if that was actually a slower break, like a little break and then like a churn down after the break, I'd stay in it. But because it went so far so fast, I don't want to stay in that because I think there's too many people that sold into that, and that in itself, all those sellers, is what's going to cause it to actually move back up. And indeed it actually did move back up from here quite a lot. So that's the end of the video. So the pre-breakout trades, just remember, the moment you start to see the buyers coming in force, you get out. So if you've got any questions, please email me. And until the next video, goodbye and good trading.